And thanks for joining us here on PM Express. And another day, another grim reality for this country. We now know there's been another downgrade. But even before this downgrade, we'll be having some conversations about your investments. So I really wondered today when I saw the Moody's downgrade, what that will mean for many of you who have invested and holding some funds with the government. And the government have already confirmed in the budget. And you see that the IMF has now picked that up as well, confirming that you can expect some restructuring that will affect your investment. So let's break this down a bit more and drill down to many of the questions that you have been asking for quite some time. Are you experiencing a haircut? Why are you losing some of the principal if you want to liquidate your investments? We'll get some answers tonight on the back of what has happened already with the Moody's downgrade. Now, one of the things that shocked me today is going back to January and looking at how many times we have been downgraded already by the ratings agency. And as you see behind me, we counted as many as 7 downgrades in 1 year. And the year is not over. Starting from January 14, we've been downgraded 7 times. I'm pretty sure if you check the world over, you might find that this possibly is tilting on the edges of becoming unprecedented for any country. But definitely for Ghana, this level of downgrade in 1 year, let's be specific, in 11 months, it's really unprecedented. It started with Fitch, Moody's, S&P, Fitch again, Moody's, and Moody's. So 7 downgrades in 11 months. That really should tell you we are in, words can't describe where we are. The president said it all, that we're in crisis, right? And politicians hardly admit when there's a crisis, but he did. And this tells a picture, right? So 7 times that we have been downgraded. And it's really never happened before as far as this country's economy is concerned. And that will have implications for what you have invested, the amount of money you have saved, you put away into pensions, etc. All of it will be affected somewhat by this picture here when it comes to these downgrades. So the Moody's is the latest one that has happened again. And they explained to us that they are factoring in the potential for restructuring, which the 2023 budget confirmed. It is a primary reason why they have downgraded us again. So they are telling you that you should expect losses if you are an investor, a local investor, a foreign investor, investing in government bonds and other government securities. You should expect losses, which in essence has led to this current downgrade. That is fundamentally why they've put us down. We are already down. In fact, somebody was saying that this is junk status, further down junk status. This is below rock bottom. That's where we are. Rock bottom is where, what the expression you use when somebody's really down and out. This is below rock bottom, right? Just imagine that for a second. And then you look at the Moody's and Fitch cite same drivers for their downgrades, which we all know already. I don't have to belabor the point there. You see them same, all of them, anticipation of people's investments being affected. And the budget confirmed that exactly. But the IMF itself now has updated their Q&A, and they're also factoring in the fact that you should expect a restructuring of your debt. I know there are a lot of semantics around whether it's going to be a haircut or not. I can tell you without a shadow of doubt, there will be a haircut. There will be a haircut. I know the president said there's no haircut. Yeah, there is a haircut coming. The explanation that we've had is that the president said no haircut. But the explanation is that the restructuring will not affect your principal. That is according to the information minister after the president has spoken, right? And this is just tracking And this is one of the problems we find, okay, because on this very sensitive matter, we've had 4 different, in fact, now even 5, I'll tell you the last one, 5 different positions expressed by senior government officials on it. So that then confuses the market. And they will price it in to the bond prices, right? Because your risk then, if credibility and information is everything, they will price it in. The cost of borrowing will go up even more, even up aside Moody's. All this is a factor in this, right? The president says no haircut. Information minister then comes a day after to explain, yeah, I mean, he was on the show, I asked him, yeah, no haircut, restructuring will not affect your principal, but all other things are still on the table. Yes, he confirmed all other things are still on the table, including your interest, including extending maturity dates. That is a haircut. Nobody can dispute that. Ken Ofori-Atta also comes up in the budget and then introduces the expression debt exchange, which means the same thing, debt restructuring, right? So there's going to be debt restructuring. And then John Kumar, speaking to me live on television just after the budget was read, clarified a bit more what proposals government is considering as far as the restructuring is concerned. One, the proposal is you should suspend interest payments. They will suspend interest payments for up to 3 years. First year, 0 interest. Second year, 5%. Third year, 10%. And then fourth year, before you can expect to be restored back to your original position. And then if you're holding foreign denominated bonds, 30% haircut, that then will affect your principal as well. That, in both cases, is still a haircut. And then the fifth one is when the finance ministry issued a statement on the back of this and said, we are still negotiating. Nothing has been agreed yet. When they agree and they finalize, they will communicate, right? So that didn't say this is inaccurate. We know this were just proposals and what government was thinking about as far as the restructuring is concerned, that, of course, hypothetically he put out. But let's see what the final picture looks like once they get to communicate it, because they have to talk to the investors. So that is one of the challenges, but it's moved. But I think there's no doubt now there will be a haircut. Your principal, yes, if you're a domestic bond holder, may not be affected, but you can expect to lose something when it comes to your interest payments. So that's where we are with that. And then you look at the finance minister, the debt sustainability analysis, which is really at the base of this, has now been concluded. And that will really inform how they go forward with the conversations with investors on this. And no program. And the reason why all this is important is that as for the IMF, they will not give you anything if your debt is unsustainable. And the budget confirms that our debt is unsustainable. I mean, the finance minister was very clear about this, that we are at a point of high debt distress, which we've been for a while. I mean, and it's unsustainable. It's just that he's now saying it and owning it. So if you go to break down what our debt portfolio is, we have domestic investors holding 152 billion, 84%. And then you have the banking sector holding 91 billion. And then we've talked about this before here on the show, represents some 50.2% of the debt. So when you restructure, the banking sector will take a significant hit. There's a reason why the governor has said this week that they're keeping a close eye on the banks, because they want to make sure that they are solvent, but they are ready to intervene quickly if there's red flags emerge, because this is dangerous territory here. The non-bank sector, pensions, etc., 61% also exposure, right? So pensions, again, will have to be looked at. Elsewhere in the UK, when this happened, the central bank started buying back the bonds themselves just to protect a bit of the pensioners, etc., who had put their money, pension funds, who had put their money of pensioners there, right? And then foreign investors are holding that 28.9 billion, 16%. So that's where we are on that question. Now, there's the question of a haircut, I said, has come up quite a lot. We don't know what the details is, but the question that many of you have been asking, and you've seen it on social media, is you've gone to withdraw your money, say, from an M fund or the mutual funds, and you're losing principal. it is because of a directive that the Securities and Exchange Commission had issued to the investment houses, mark to value, right? Some investors expressed worry about reduction in the principal. And so, but previously, people were going to the places and they were giving them values, they were guaranteeing them value, which isn't, if you know anything about investment, that shouldn't happen. And so they're applying this, which means that if you apply the current market value of your whatever investment you have, it's trending in the negative. You should expect that it will erode. If you redeem it now, it will erode. So as the explanation has been, it's best to keep it there and wait for the markets to rebound and full maturity, and then you can expect to get your full value back, maybe plus some interest as well. It's investment. When you invest, you lose, you gain. You just basically just go home with just enough of what you put there and you take out. So those calculations are at play here. I want to bring in my guests to have this conversation. I just want to stress what this means for your investment, for this country going forward, where we are. Can we even go any further down from where we currently are? And then the key question that also becomes is, now to the end of the year that the finance minister is hoping that our savior will be the IMF, finalizing negotiations. There was an announcement by the IMF that they should be in the country today for another round of talks, all geared towards finishing this very quickly. My guests will be seated. Stay with me. A lot of your answers, a lot of questions you've been asking, we'll attempt to answer them with our guests after this. Dr. Richmond Echiahini is a banking consultant, joins us on Zoom. Professor William Pepra is Associate Professor of Finance, Andrews University, Barron Springs in Michigan, USA, joins us on Zoom as well. We also have Christian Tichijan, he's a financial analyst, also joining us. I want to start with that basic question that you may have seen this making rounds on social media. Christian, to you now. Many have said, even before we come to the talk of restructuring, etc., some local investors on social media have complained that they go to their banks or to their investment houses to withdraw their money, and part of their principal has been wiped out. What is happening?
Yeah, thank you. Good evening to your viewers. What is actually happening now is that normally with the investment companies, whatever investment that they take from the general public, they're actually not supposed to promise any interest. But at the point of payment, then they look at the mark-to-market value, and then they structure a payment plan for them. But over the period, what has been happening is that they pick the interest, they pick the sum, that is a principal amount, and they promise them of an interest component of a rate. And so that has been the practice over the period. During the banking cleanup exercise that happened somewhere in 2017, a lot of changes were made by the Securities and Exchange Commission, where as at the point of redeeming your investments, it will be marked to the market value. And we all know what's been happening on our bond markets. Value is being lost because of the confidence that people have lost in our bond system. They are discounting a lot of some of these principles. So as soon as you go in to discount your money, that is the investment that you've made, that rule has to be applied. We had just been getting away with it for over all these years, but ideally, and as a matter of practice, that is how it ought to be. But this is the very first time Ghanaians are actually experiencing it, because this is the very first time we are actually applying the rule as it ought to be. That is why we happen to find ourselves in the situation where, as and when you are going to discount your investment, you are going to lose a part of your interest as well as the principal, because it is being made against the mark-to-market value. So that is what's actually happening. But
you're saying that even applying the mark-to-market value, I mean the current values of your investment, somehow will still erode your principal. I mean, if you're in a bond market, if you're a bond holder, of course, if you want to dump your bond, I understand that. I mean, of course, you would, if you don't wait to maturity, you can only sell it at the current market price, which, as it is currently, you would lose. Sometimes you lose up to 50% of your value, which includes your part of your principal. But what about those who are investing in other securities, right? Other instruments, not bonds, but they are also complaining, M fund, etc., etc.
Yes, they all happen to be under the same umbrella of the long-term investments. What those who are actually having a field day are those who actually invested in the treasury bills, which happens to be the 91-day, 182, and of course the 1 year. So once you invested in these short-term instruments of the government, yes, then you rather be at the winning side because T-bills now are over 30%, and so those who actually invested that side are gaining in terms of value, both principal and then the interest. But so far as you happen to find yourself within the bond space, obviously you'll be losing some value because a lot of investors have lost confidence in the bonds that are actually issued by the government of Ghana, and therefore actually dumping the funds. And so far as there are a lot of discounts, definitely the mark-to-market value is what is going to be applied.
Okay, Dr. Richard Chahine, that is fair, is it not? What's happening right now with those who claim they're losing part of their principal is just a reflection of the current market.
Thank you very much, Evans. I think we have what we call treating customer fairly. These are principles in investment and in banking. When a person comes to buy a product, a bank product or investment, you go to tell him specifically this condition, how it prevails. Except in only this part of the world. In UK, when you buy the bond, they will tell you that if the price goes down, this is what you're going to have. But you see, if you don't treat the customer or the investor fairly, and then when it comes to redeem, you want to apply it, you're not being fair to the customer. Because if you have told him initially, the investor would have a choice to buy or not to buy. So my only question is that you apply the mark to market, but were they informed before the sales? If they were not informed, then you're not treating them fairly. If you go to any jurisdiction, maybe apart from Ghana, you're not going to have it easy because they have been tricked into it. They have not been told the nuances of what would be the position. Because the person who came, he said he wanted to buy a Ghana government bond. Did you sit him down to tell him that if the market goes down, this is how much you're going to get? I don't think they did that. It is only when they want to apply it in the accounting principle, then they want to tell them. It is not going to be easy for an average Ghanaian or domestic investor who has not been told. I'm currently dealing with about 3 cases of this, and some are threatening to go to court to defend their position. So we are in a very difficult situation now. You cannot say that because they have buy the bonds. Did you tell him prior to the acquisition of the investment?
Yeah, let me ask that question of Christian, because Christian is in that space. Christian, in your area, what you say to what Prof is saying, are your customers, for example, told explicitly when they come, we want to invest in any of those instruments, that this is what is going to happen to you if the market misbehaves? Or because it's never happened before, we've never experienced such turbulence in the Ghanaian market, you took it for granted that this will never happen, and so you never mentioned to the customers. Is that what influences?
To be fair, the system hasn't really been working until just about 2017. In my earlier submission, I did indicate that previously, as and when a customer brings some funds within the investment space, they actually promised of a particular amount of money or a particular rate that they are going to get on their investments. It took the banking sector cleanup and for Security and Exchange Commission to pick cue from it.
I understand that, but I guess the question is, post that, are investors told to expect a loss when they bring their monies?
Of course, with the terms and conditions that are actually available, we are very much used to the system in Ghana where terms and conditions are really not really adhered to. They just glance over it and just sign off at the end of the day. not knowing that these are actually contractual terms that needs to be followed through succinctly. So at the end of the day, if you fail to go through what the dictates are, and it comes to the application and it's being done, you can barely blame anyone. But you cannot really blame the customer that much. You also expect the finance people or the investment personal bankers to actually go through that process of explaining what it dictates or what are actually stipulated in those contracts to the understanding of these customers. Then they will decide for themselves whether to go for it or to decline.
Professor Prepra, let me bring you in. I mean, what we are talking about isn't a haircut, is it? I mean, this is just a reflection of the current investment climate we currently have, which is a mirror of the general macroeconomic condition this current government or the country finds itself in. That's what it is, isn't it?
Good evening. Thank you very much for me to join my colleagues. So the situation we find ourselves in Ghana has arisen because of major impact of our debt situation. It takes me back to the basis of finance or teaching investments. The first thing we normally tell our students is that there's a risk and relationship. Then we tell our students that there's a time value anytime you are going to do an investment. The size of your investment also counts, and there's the trade-off between risks and returns. What I've noticed is that most investors or Ghanaians are not well versed in financial literacy. So what is really happening has become something new to all of us. Also, those who call themselves financial analysts, sorry to Christian, but I just want to make a point. According to the Security and Exchange Commission Act, anybody who can give a financial advice should have passed the Ghana Stock Exchange course. I think now they have changed the name. So if you go to all the financial institutions in Ghana, all their customer service providers should have sat in that class, passed them, and then it will give them and it will put them in an informed position where they'll be able to educate any customer that comes in front of them. The same thing applies to taking a course in the banking, Ministry of Banking, I think Professor Tua's institution. But this is not being enforced. That is why we are seeing that this is very new to all of us in Ghana. But in the US, currently, financial literacy starts from what Ghana will call it GSS 1. So it is a mandatory course that everybody takes, which becomes like English and maths. So they are building the mindset of the citizenry so that they will understand should something happen to their investment. This is what is lacking. If this understanding or financial education is given well to Ghanaians, people will understand the situation. And when you are going to buy a bond, you will know the risks attached to purchasing a bond. You know the risks attached to buying a treasury bill. You will know the risks involved going into the stock exchange. And this is what is really lacking. So the situation we find ourselves in Ghana, where government is talking of a haircut, it is something new. To be honest, there are a lot of Ghanaians, this word of haircut is the first time people heard of it and people started checking. But in the US, it's very common. Investors understand the situation. Yeah. And it will put you in an informed position and for you to know where to place your funds.
Absolutely. Let's expand on that because that's where we are tonight with the Moody's downgrade. Dr. Richmond Etiahene, Moody's in downgrading us again tonight. And as I explained in my intro, this is a 7th downgrade in 11 months. Their reason primarily, it's the anticipated the impending restructuring of the debt and the fact that investors will have to take huge losses. So that's where we are tonight, Dr. Chiahede. This is, give me a quick comment on where we are, also considering what we learned from the budget, and then subsequently explained what the nature of this restructuring, which we now have a fair sense of, which is going to be interest hits, extension of maturities, suspension of interest for domestic, and then for foreigners, you're going to take a hit on both principal and interest. Of course, the Finance Ministry caveat has said to us in another statement that those details, they are yet to finalize and that the conversations are happening, and when they finalize, they'll put before us. Give me your take on it, on a day when Moody's looked at all that and said, we're giving you another downgrade.
Thank you very much. I think the debt has become unsustainable, and we heard from the finance minister. The issue is that if you're doing debt structuring, there are various methodology or options. In some countries, you look at debt reduction. In other jurisdictions like Uruguay, you look at debt reprofiling. In other jurisdictions, you look at debt risk hedging. But in all the talks, there is a creditor losses there. There are creditor losses. Investors would lose, whether you like it or not. Even if you blend the haircut, reprofiling, risk scheduling, people are going to lose money. So I'm not surprised that Moody's this morning is something I've been talking about it, that no matter what we do, the domestic investors are going to incur a substantial loss. A substantial loss. If my calculations tells me, if I want to disclose to you what I have done, it is not something we can easily even talk about it. They're quite enormous, and that would basically impact on the whole economy. And given all the measures being put in place, this will possibly throw the whole system out of gear. So it's something that I think Joy has done very well. Start educating, like Professor Supra said. One thing in this country, we can sell anything to anybody, and nobody is there to explain to you. It is only when you have a problem, then you have to ask questions. And I believe that way forward, in future, even buying treasury bills, like Professor Supra said, we should take it serious and let people understand, because risk goes with return, as he said. But if people are taking risk and they want to take return and they don't know the risk, how do you blame them? I have a friend who has lost, he had 1 million Ghana bond. Last week he called me and said, Doc, Maboka. And I said, what is that? I said, look, I went there today, they told me that it has dropped to 436,000 out of the 1 million. Straight away. This man called me and the blood pressure started going up. I had to call his children to calm him down, because when he was going to buy this investment, my brother financial analysis, they have never taken on themselves to educate, to teach people in investment and the risk return. So I hope, apart from the losses we are going to take now, the losses creditors are going to take, or the bondholders are going to take, those in position must make it a point to educate. Go to because we have high literacy. Go down. People are buying mutual funds. I saw in the social media, a woman who has saved 30,000 to go and bury her mother. He went to one of the institutions. They told him that you can have 19,000. And this woman got angry and has insulted them and left. Because he said, if they have told me, I could possibly have saved putting my money on the ground, and that will not incur these losses. So, like Professor Fred saying, we should learn. The losses are going to come. Evans, whether you like it or not. If I've told you, I'm giving you some figures, and I don't want us to talk about it. The figures are not pleasant at all. Whether they call it debt exchange, whether you call it debt profile, it means people would have to forgo their money in order for the government to be able to succeed. And in the debt treatment under the G20, the creditors would have to be treated equally and fairly. You cannot single them out. I look at the pension, the private pension, the tier 2. The law they made saying that invest your 60% in government bonds. How do you create such a dichotomy? Instead of giving them the opportunity to do their own investment analysis, the law is saying that put 60%. Now, if you're going to do a haircut of the 8.9, if you do the MPV of the 8.9, and even take 15%, those people in tier 3, tier 2 are going to almost finish. So for me, let me emphasize it. The laws are coming. And there is no wonder why Moody's today affirmed something that I was afraid of. And immediately I saw it in my paper, I have to address and use them and confirm the potential losses that is going to come. So whether we like it or not, we have created a problem for ourselves, a monster, and we have to treat it, we have to deal with the monster.
I mean, so, Professor Prepra, let me ask you. So at this point, we know it's inevitable. The restructuring will happen. But the biggest question that we haven't answered yet is, what is the best approach? What is the best approach to the restructuring for both domestic and for foreign? Let's start with domestic. Government has said a few things. I mean, the latest clarity we have is suspension of interest payment for 3 years. Second year, they'll give you something. Third year, they'll give you something. But then fourth year is when you can expect to return. Is that the best approach? If not, what should be the best approach in dealing with the domestic bond market when we are restructuring, considering, as Dr. Chiani said, its impact on pension funds, the insurance sector, the bank's exposure, etc.? What should be the best approach?
Okay, thank you. So on the domestic market, for me, the best approach to apply to, because of the various sectors of investment, I will classify them. For the bonds, because of confidence in the Ghanaian economy, it is better to defer interest payments and then pay principals so that people will be able to get cash flow to survive. The reason why we have seen a lot of people trying to dump or discount their bonds now because they need cash to survive because of the high inflation. So government will have to have a metrics where a certain class of investors are allowed to receive some funds to survive. I give an example. If I'm a pensioner, normally when they are doing the bonds, they will collect some data, the date of birth. So all those things are in the database. So they must come out with some classification of individuals or age group brackets that will be allowed to withdraw some funds immediately. For those who are within their youthful age, between 20 to 35, in terms of years, they have time. Can we have a discussion to prolong their payment of their principal and a little portion of their interest to them for them to survive? To pay a zero coupon is going to have a major impact in the Ghanaian economy. So on the bond market, we have to use the age brackets to be able to consider some issues. Also, pensioners or pension fund investments must also be looked at. Those investment brackets, which one can we prolong? If they are holding more bonds, then they have to be able to find a way to diversify. What I'm seeing is that people are currently trying to move from bonds and come to the treasury market and especially invest in the short-term securities. So government must be watching that one as well. When it comes to the foreign investors, for the foreign investors, I bet you, if IMF say that we are going to seed $1 billion, if you check the analysis, the next 3 years, I think government will be paying about $1.6 billion to foreign investors who have invested in government bonds. If IMF is giving us the 3 billion and half of it is going to go to foreign investors, and they ask them, take a 30% cut so that we can pay you now, that is a discount, all the investors holding government securities will opt for it. This is going to save the country a lot of pressure on our foreign exchange. At the moment, based on the Bank of Ghana data issued, we pay particular attention to the net international reserves. It is left with about 1.2 million. This one excludes, according to the central bank, encumbrances, that is, guarantees we have made on petroleum fund and other payments. In reality, what we have, if you check the analysis, is only $500 million. That is the only dollars we have. So if IMF gives us an option that we are going to help you to pay off your external debtors, can you have a negotiation with them to have that cut of 30%? Most of the investors in the external position will take that particular approach. It will save us the pressure on the CD.
When you talk about 30% for external debt holders, are you saying 30% on principal and interest, or interest excluding principal? Both.
Both. You see, the grading given by Moody's is a signal that government is going to default. So if I'm an external investor and I'm holding government bonds, I want to exit.
But now you can't exit. You are better off taking the 30% and then, haircut than exit. Because if you exit, you lose far more than 30%.
That is the point. So external investors are really watching. That's why in the past we are talking of IMF should come in and the confidence will come to help. Definitely, I'm sure IMF is not going to give the money, all of them, to government of Ghana to support their budget. A lot of them will be going to support the payment of balance, which really relates to payment of debt. This strategy will really save the country the pressures on the foreign on the city. Let me give you some positive signals of the ratings. We have been talking that it's going to affect Ghana, but there are some positive signals. There are some investors, we call them vultures investors. They are interested in a distressed bonds. So if I were the finance minister, by now, I'll be coming to US to look out for vultures investors. They will be prepared to give money to Ghana government and wait for a long period. When they do that, their returns is abnormal. They are not afraid of risks. That is what probably I was expecting the finance minister to be traveling around, to be talking to people. I give you an example. He did that in the first year when he came into government. The Templeton funds bond that came in, Templeton is a vulture investor. The first $3 billion he gave, he profited 20%, and we have paid for 3 years. So he may have to go and look for vultures who can give us money for a longer period alongside what IMF is giving to us. Now that the downgrade has also come, it is a signal to all investors that have the patience and wait. If you really don't understand investment, the downgrade is telling you, don't rush, have the patience and wait. Because in finance or in economics, it's a cycle. Today it is down, today it will come up. It depends on the timing. So exiting point is very important when it comes to investment. So I'm sure probably those who don't have financial literacy advice, don't rush. Just have the patience. The economy itself will slow down, no matter how it is. If Jesus Christ does not come, the system will itself slow down. And in finance, there's something we call behavioral finance, which has become very common nowadays. People have psychological effects when it comes to money. As you are rushing to exit, somebody is coming in to buy and wait. So why don't you join the person and wait? This is the kind of language I'm expecting us, like myself and others, should be speaking to Ghanaians.
Let me go back to something you said. You're saying that for investors holding domestic bonds right now, who are rushing to Christian and Co to say, I want out. You're saying that the best approach, leave your money there. You can guarantee that the cycle would run its course. The crisis will go over, and the bonds and the market will rally, and then you can begin to make some gains. That's what you're advising.
Yes, that's what I'm advising.
So relax. You're saying relax. Don't panic.
But that's what I'm saying.
But
then it also requires the government to be able to do some things to slow down the pressure.
Yeah, but Prof, stay with me. Let me bring in Christian. I'll come to Prof on that question. But Christian, that is only possible. This relaxing weight to rebound is only possible if you have huge disposable income and you don't need money now. Because if you need money now, that's not a story you hear. You will go. In fact, some may actually be so stressed that Dr. Chiahini's friend who is losing 500,000 plus might be in a position where they will take that loss because they need that money for something very urgently now. Isn't that what this comes down to, Christian?
Yes, right, Evans. But before that, let me just issue a disclaimer. I'm on this panel in my own right as a financial analyst, and I don't represent any institution. So let me just put that one across. To your substantive question, yes, especially with the pensioners, I'm sure the fund managers have got a diversified portfolio. So whilst they've invested some of the funds in the bonds, which are long-term, I'm sure they've also done same in the treasury bills, which are more rewarding now. So for me, with the case of the pensioners, plus or minus, they should be doing even, because though they are losing on the bond side, when it comes to the treasury bill side, it is doing very well and they are actually profiting from it. But when it comes to individuals like Doctor's friend, I mean, it's quite distressing because inflation is very high, 40.2%. So that means whatever money that you are holding, the value has actually reduced. If you are a business person and you are working with a $100,000 working capital, definitely by now the value will have reduced. So there is the need, if you had any savings somewhere, as people had actually done with the bonds, then you go to draw some money. It is what it is. Investment is what it is. Deciding to make the investment in itself, it is actually a risk. So far as risk is concerned, it's either you gain or you lose. In this case, it's just unfortunate that the market is giving us negative signals, and therefore people will be losing a part of their principal. So it is what it is. There is absolutely nothing we can do. But as my prof said, it's important that people have got the waiting spirit. So far as investment is about winning and losing, now that you are losing, you can anticipate that very soon you can start winning. So they just have
But I insist, whilst we give that advice, you have to add a caveat that unless you critically need the money, wait. Unless you critically need the money, wait. Because some people need the money so badly, they can't wait, right? I mean, it's fair to add that caveat.
Exactly. A friend was also doing an analysis of somebody who had gone to discount the bonds and the amount that he had lost, plowing it into the treasury bill for the 182-day, he was going to make a loss of just about 14% at the end of the day. So these are all investment decisions that we have to make. You can speak to your fund manager.
Okay, so no, you make a point I need to clarify. So the person disinvested. I'm assuming this may be a bond. This may be a bond.
Exactly.
Yeah.
Exactly.
And then took obviously a hit because your principal will be gone, and then reinvested that money into treasury bill, possibly 90 days, and then make some 30%. Treasury bill is around what, over 30% plus, right?
Exactly. 36.
Yeah. So 90-day, quickly turn around. You make some of the money back. You possibly can reinvest it another 90-day. By the time you do 3 of those, you possibly would have
roll over principal with interest.
You possibly would have made back
3 cycles.
Possibly would have made back what you lost.
Exactly. So by the third turn of the investment into the short term, that's the T-bills, you should be making up for all of those losses. So, I mean, people will have to start speaking to their investment advisors. They have to speak to their fund managers. And some of these options are available where you'll be able to balance your books properly.
I mean, Professor Tuahene, I need to ask you, Dr. Tuahene, Prof gave us what he believes to be the best approach in a restructuring. I don't know whether you agree. So his point is interesting, that disaggregate the haircut based on first people's ages, those closer to pensions, give them a certain dispensation. Those who have younger, then defer their interest, till later they can take it. And then you treat pension funds differently. Foreign investors, you can give them a 30% haircut they will take. Do you agree with that proposition?
I think Professor Bre knows very well that part of the debt treatment, saying that people should be treated equitably and fairly. If you begin to segregate it, would you be treating people fairly? The question that I want to say is that all these things that we are saying, people are forgetting that there is a loss of cash flow and time value of money. Whether it's a haircut, whether it's a debt swap, the people are not going to get their cash flow to be able to run their business. The first thing people should know is that businesses are not going to expand. If you do a haircut of even 15%, do a debt profile, another 20%, do this. All these things are creating physical space for the government, but it is at the detriment of the credit.
Yeah. So, Doc, having said that, I want to ask you, what then is the best approach? Because we've said it, we all agree restructuring will and must happen. So what is the best restructuring approach?
I would, from where I sit and what I done, I would say let us do a bit of haircuts. Let us do a little bit of rescheduling, right? And then let us look at the reprofiling. Uruguay had the same challenge, and they did the reprofiling. It helps them. But the condition is that Prof will know better than I do, that the good thing is that there must be austerity. There must be austerity to prove that we are prepared to do that. It means government must have expenditure control. Because other than that, if you read the literature, Evans, in some jurisdiction, when they have crises like this, it is about expenditure control to bring the debt GDP ratio down. In other jurisdictions, you don't go by what we are doing. But my worry is that if people are to forgo, say 5% of their business, rescheduling, what is the government going to do? Because you see, if the expenditure control, the austerity is not put in, as I said yesterday, you're telling other people to tighten their belts, and people want to lose their belts. So let me give a candid opinion. I will do a myriad of about 3 or 4. I'll let them do that. You see, Evans, the reason why Prof said is that in this country, all these people are talking about their profile. There is nobody has sat down to do the calculations. If you get to do the calculation, you begin to appreciate where I am coming from. Some reprofiling will cost us so much. So I will say that let's do 20% there. Let's do 20% rescheduling, and let us do 20% on the haircut. Myriad it. We shouldn't stick to one, because if you stick to one, the consequences can be enormous and huge.
Yeah,
not even on individuals, the economy as well. Because if the economy doesn't grow, there will be low, the domestic generation revenue will go down.
Yeah.
And the taxes and the projections you have set for yourself, you will not be able to achieve.
I mean, Dr. Tuahene, there's something you said that I think is a perfect way to end this. That you cannot do restructuring without a significant cut in government expenditure. And I've heard so much today about how to restructure and the best options. But it's good that you brought it up, because that is so fundamental. Because, in fact, that is where it starts. You cut expenditure to signal to the market that you are ready to now have a conversation. Because if you go to the UK, they sacked our good friend Mr. Kwarteng, our countryman, because he introduced a budget that, in essence, was going to blow the expenditure at a time when your debt was going up, and the market punished him to the point where he had to go. The next PM comes in, introduces a budget with austerity, tax, new taxes, etc. Raising revenue and cutting expenditure elsewhere, and the market reacted. So it's good that we ended on that note. And I guess the reason why the market is jittery is that they haven't seen enough of the cutting, and they hear a lot of restructuring. This gentleman, thank you very much, Christian has given me a good advice. I might take him up on that. Just do some treasury bill. This is a treasury bill to recover the losses and go. Maybe Dr. Chia, advise your friend that he shouldn't worry. Go and take the money, 400,000 like that, and then do the certain recycling. He might get the money back.
I'll advise him to go and see your friend.
Anyway,
I won't. Professor Prepra has told me I won't go and I'll prefer them to do.
Okay, well, unfortunately, his network isn't here. But thank you, gentlemen, and enjoy the rest of the evening.
Literacy and education, which